Everyone, wandering trader, your quick take, low budget trading nomad. So today we are back with another portfolio update. We're down for the week so far, I believe also the month, from all-time high, the portfolio's performance. So we peaked at 231 and now we are at 216. So Wish is dragging down my portfolio a bit, but we have intentions for this. I plan to play this into earnings, and if it doesn't work out, then we will keep on playing this. So if you guys are interested in some of my dividend content and nomadic content, I generate reports. I'm currently in Mexico City, so I also put up weekly updates on my trading account, so you could check this out if you are interested in stuff like that. So let's take a look at the cost basis and let's see where we are at. So for SOFI, last week I wrote 19 cover call, 250 premium, and now my cost basis is 1341. So that is a winning position that we have grown and developed when it was very volatile. We built it up and we rode it to current to now. So I have started the same with Wish. I nibbled a little bit and got my feet wet around 7, and then 650, and then 6, and then 550. That's when I decided to go in. So it so happened that with the debt ceiling situation, macroeconomics, and the sentiments and inflation scare, so the last couple of weeks have been a sell-off, but we are averaged in at 592. I'm pretty satisfied with this position. So we are gonna keep on writing for that. I have generated my intentions for next week, but let's recap. So we played Baba a couple times, so we're using the rest of our portfolio at this current climate to go into large cap, mega cap, and we're going to let our SOFI and our growth company Wish to play out. So these are the premiums I was able to collect. Not much, but it's something we're participating, and I wouldn't say we're necessarily moving the market, but we are influencing it more or less by participating in it. So these are some of the plays, right? We had some premiums here, and let's take a look at the economic report of last week. It was not as bad, but still a little downturn. 2 weeks ago, it was actually quite red. As you saw, there was outflows from equities every day. So this is basically the only negative would be the non-farm payrolls and the non-farm private payrolls, but everything is more or less stable and it's playing out. So these are the 1 week chart for Wish. As you can see, these are the large order flows. On Friday, it was actually quite slow. The volume was a little bit lower, but I believe it was only 10 or 15 million. Usually there's a lot of volume in this, like 50, 60, and it averages around 39. So this is something special. I know I can't be, the probability of generating profit is very highly likely on this. So let's take a look at SOFI. I started going out further out into the money because I am anticipating the bank charter. This is when there was the upgrade. Two analysts upgraded this. This was the time. It peaked at 1808. So I'm going to start writing maybe around 1850 and 19, depending on the climate of opening bell. But let's take a look at how let's take a look and let's analyze Wish, right, and SOFI. So for SOFI, we had upcoming catalyst, bank charter. That meeting September was over. They talked about slowing down, tapering a little bit. So tightening might be coming in a couple years. That's the raising of interest rate. Tapering is basically reducing their bond purchases. It's still high in revenue. They're trading 10 to 12 times revenue. So growth fintech, I was interested on like interest rate and how is it going to affect them. Fair, 12 to 14. Customer growth rate. This is something we have to track for the next upcoming earnings. Analyst 1 year price target, 2025, 30, ready to 1650. All right, so for Wish, I'm not too worried about SOFI, but Wish, considering that this is a big drag and it brought in more variance than I would like in my portfolio. I like to see upward trend. We understand technically everything is supposed to be emotionless and we see percentages, but it's kind of a mood killer to see like outflows and not. Let's put it this way: we like to get everything at the bottom after capitulation. So the miscalculation on the Wish end of picking it up around 6, that's quite upsetting on a personal note. But let's moving forward, we're trying to get the best prices possible. So let's take a look at this. Let's move this out. So far I'm not too worried. Like I said, Wish, we have not profitable yet, meaning this high competition interest rate. These are some of the risks revenue, trading sideways, 1 year price target, right? But it is ripe for M&A. So let's take a look at some of the numbers for Wish, and we are looking at 2.94 billion market cap. So this is ripe for M&A. And I've also, this is all speculative, but if this was incorporated into Google Play or Amazon, this would actually be a very unique proposition. So based on its model of discovery and how most of social media is moving towards that way in terms of TikTok, Facebook, Instagram Reels, YouTube Shorts, and this discovery-based model, I could see this being incorporated in this model being incorporated with either social media or gaming. So I'm quite confident in this position and this company. Aside from how much cash they have and stuff like that, I've also came across this report from Avory. So let's take a look at the management. So this is the CEO. So these are some of the people in upper management, and this person is actually highly skilled and have a background in Goldman and specializes in M&A. So let's take a look, Julia M. And let's take a look at scroll down a little bit. Let's take a look in comparison to some of the competition. So this is in its own. They have some. These are some more or less some competitors, but it's a different way approach. So we have eBay, Amazon, mass retail, niche, Wish, and AliExpress. They're on value and discovery. So let's take a look at the marketplace. I tried installing this app on my Android, and there were over 500 million people who have already installed this. So that's just something I've noticed on my end. So let's take a look at some of the numbers over here. Monthly active user is declining a bit, but they have cash and they just have to tweak the algorithm. So let's analyze the Wish app ranking. So is in the top 15, Android, Apple. So you could take a look at their more or less their ranking in each country. So they're quite relevant, and we are talking about a $5 price action right now. So some of the user interface notification unlock scene. This is a very interesting, unique concept. Unlock daily reward. This plays into the gamification, discovery new personalized product. So that's very interesting approach. Very different from other online e-commerce. So take a look at 70% of sales based on this Avory's memo report. 70% of sales on the platform do not involve a search. So you open it and it's just like TikTok. Everything is personalized. It's for you. Hashtag for you. So distinctive product seen per 90% of activity of purchase originating from mobile. So they are focused on mobile. So target market is big. Let's take a look at the demo. The customers Wish their customers' average income 50 to 55K. So this is middle working class people. It shows compared to the other e-commerce. So let's move on. So this is what they have to tweak out. They're gathering a bunch of data. I believe they have to work on the logistics. Again, and let's take a look on their expansion merchant platform. They have someone also heading and developing Australia at the moment. So they're onboarding more merchants out in Australia. That's also the latest T on that. Okay, let's move on. So app downloads every month globally. So this is the interesting section regarding their approach on logistics and compare it to Amazon. Let's move down. Their strategy. The first mile partners, they bundle, they source it out. So this is a very different model compared to Amazon, who's building out their fulfillment center, and they actually have the warehouses and the network of logistics. So Wish is taking a different approach. They are basically going the other route where they are partnering up with everyone and everyone else's infrastructure in order to fulfill. So that's why I could see why there might be some delays in more or less, but it's a cost. It reduces their cost. They don't have to build out the network. So this is how more or less they play out. Okay, so moving forward. Anyways, let's not. All right, this will be the last slide. So driver for engagement, discovery versus intent. Sales do not involve search. Mid to low income, logistic asset light. Engagement level 9 to 10 minutes. Amazon unknown, 100 million monthly active users, 200. So they were also approached by Amazon and Alibaba 5 years ago, offered 10 million for a buyout. CEO rejected. So let's move forward. So my intentions for next week is going to be 1850 for SOFI, since it's going to be the monthlies. So there's going to be a lot of institution like transitioning. There's going to be a lot of inflows and outflow. So this will be an interesting time. Wish, I'm going to write 100 out at 6, and I'm going to write 50 out at 6.5. So you saw my average already. It's 590, 92, 93. So I'm going to play that out. I also wanted to show you that I am at, what is it, 0.04 times 52. So this is what I'm going to be bringing my cost basis down to. If the earnings doesn't play out correctly, so I am going to be owning the shares at around $2.80. So I'm going to be owning it for practically almost $3 and 80 something cents. So this is, if earning doesn't play out, that's what I'm gonna do. So moving on to next week, like I said, I'm gonna write 100 out at 6, and I'm gonna write 50 out at 6.50. And for SOFI, I am gonna write it out at 18.50. Normally I would go 19, but since there's some type of negative sentiment regarding lawsuits, and it only peaked out to 18, I'm gonna write 18.50. I'm fine with letting it go and having more cash. I have maybe around 45% cash right now. So if there's going to be any plays, I am going to be playing Baba, or I'm going to be playing Tesla or Facebook. So I'm going to be playing mega caps in the event there are any more downturns. So I'm going to let this play out until earnings. Earnings is in 5 to 6 weeks, I believe, on the 11th or the 5th. So I'm going to play that out. We peaked out, like I said, around 230.31. I want to bring this to and close out the year at 250. So that is my goal. So I'm gonna play this out, and we'll see what happens. So thanks for tuning in, and if you like this type of content, like, subscribe, and follow my journey.